Hey folks, Bob Desmond over the Contrarian Trader. Where have I been? A lot of emails regarding best stock charts. Why haven't they been coming out? They will resume soon. We are doing a lot of work on the members area. We are closed to new subscribers. We are maxing out subscribers at, the number right now is at about 750. We're at max capacity and we are redoing the members area. So what we're trying to do is revamp the members area, make it really cool, set up a community, et cetera, and make it a far more engaging experience, thus adding value. All right, so why the video then? For a couple of reasons. Reason number one primarily is the state of affairs in the United States. We could speak about the geopolitical events that are unfolding, but I've been talking about them for a number of years now. But as it stands with regard to the United States, it's disturbing. And the events that have unfolded in Charlottesville have really brought to the forefront the hypocrisy, the lack of backbone in the media, in the political arena on both the Democratic and Republican sides. And I'll tell you, folks, if you step back and you take a look at the events that are unfolding across this country, the lawlessness and the willful ignorance on the part of who I believe to be honest media, and the reason why I have Twitter up front here, I think that honest media, guys like Charlie Gasparino, I'm rather shocked at some of the comments that are coming out, and I had a Twitter war with him this past week, and I'm waiting for him right now to tweet back to me that, what are you typing out of your basement? You know, Charlie's a brash guy. We don't agree on political views. That's apparent. I think the guy's a fantastic financial news journalist, but with regard political perspective, we are polar opposites. And it's not just Charlie Gasparino. You have guys like, and I respect Doug Cass of Seabreeze Partners, an excellent trader, but his political thought process is just off the wall. Now, I'm going to get to the charts in a moment because I'm telling you, folks, the events that are unfolding, the impact that it's having on the electorate are not appearing yet in the economic data. This is going to influence confidence. The economic data has been weak. It's been weakening. And the technicals in this market are breaking down. You have a media that is just so corrupt. I can't put it into words. You log on to CNBC.com at any given time. I haven't been on there yet. Let's log on to it. I guarantee there will be 3 negative Donald Trump headlines. Let's go to it. And here you go. Headline number one, first and foremost, Bannon. Then over here, upper right, you have White House weakened. Right here, icon drops out. We'll skip the Trump tweets. Down here, all the president's men departed, and this will go on and on. You know, it's just incredible that CNBC continues to pretend that they are a news network related to financial news. This headline here is propaganda, and this is not a bad day. I'll tell you, it's not a bad day in terms of their rhetoric. Here, markets like seeing Bannon go. I'm sorry, the market sold off yesterday, CNBC. Let's get to the charts. Okay, so the headline by CNBC was that the markets loved Bannon leaving, right? The Dow Jones closed down yesterday by over 1/3 of a percentage point. So much for the accuracy of their reporting on their website. And it doesn't end there, folks. We are looking at a market that is at the precipice. I've been coaching members for weeks now not to get overly short this market because a topping pattern in the market is a process. But that process is now really beginning to show signs of a confirmation breakdown in the marketplace. Simply look at the daily chart of the Dow Jones. You have a double top and lower high, and then on Thursday of last week, we broke down to a lower low. And I'll be talking about this in far greater detail with members during the week ahead commentary. And if you're wondering, when are you going to reopen enrollment? I'm targeting September 15th. enter your email address anywhere on the website if you have an interest in joining, and that is our targeted enrollment date and when the members area should be revamped and rebuilt. And this is just a daily chart, folks. The weekly charts are not looking any better. Let's continue. Weekly chart of the Dow Transport. Folks, this is a nightmare chart. If you ever want to see a chart that you want to place next to the dictionary under technical nightmare, only look at this chart. You have the Dow Transports, which were up earlier in the week, but flashed a bearish key reversal and sliced and closed down. And the operative word there is closed down below critical support at 9,200. Now, if we break down and close below 87.98 on the Dow Transports, it's all over for a very, very long time, because that will be a confirmation breakdown on the Dow Transports, and you had better be short of this market. We have been buying the gold stocks, averaging in over the course of the past several months. We have been shorting the semis, which are an absolute disaster waiting to happen. And we opened up a short position on the Russell 2000 last week. So we're positioned for this three-ring circus that you call political leadership in this country, which is just absolutely non-existent. And when I say the lack of leadership, I am pointing directly at the Congress of the United States on both sides of the aisle. The faux moral superiority on the part of the right and the lack of support of a press attack on the President of the United States and a member of their own party is sickening. And to the far left, I think that they are traitors, absolute traitors to this country. And the charts are reflecting the breakdown, folks. Let's talk about the S&P 500 for a moment. We are retesting the breakout point. Now, if we were in a market environment where consumer confidence were right, the electorate were confident in the fact that they'd be making more money this year over next, and if we had a Federal Reserve that wasn't speaking about rolling off their balance sheet, which I don't think they're going to do anyway, I would say that this pullback on the S&P 500 is a buying opportunity. And in the end, folks, it may just be a buying opportunity. I wouldn't be ready to say go short of the S&P 500 just yet, but we are retesting a breakout point. We have 2 consecutive weeks of bearish key reversals. The only saving grace for the S&P 500 is that it hasn't broken support yet, and volume to the downside light. That being said, the indicators are saying this market is rolling over. It is weak. All you need to do, take a look at the lower highs on Ultimate Oscillator, ADX signal line, very, very weak and now breaking down. The slow stochastics, MACD, very, very weak and rolling over. Now, with regard to the U.S. dollar is at the precipice. I've been talking about the U.S. dollar with members for a long time now. We predicted a sell-off in the U.S. dollar. We got the sell-off in the U.S. dollar. And guess what, folks? It's going lower. I mentioned to members a couple of weeks ago when we hit the 92.50 on the U.S. dollar, we were going to rally. That very day, it rallied. Now, I believe that rally to be over, and we are at a point where we may just break down below this 92.39 level. And if we do, we are going to break through to an air pocket that will lead us down to an 8 handle on the U.S. dollar. What must you be looking at if the U.S. dollar breaks down below the 92.39 level? You need to be looking at emerging markets, EEM. While I wouldn't be an aggressive buyer right now, it's in a consolidation. After a bearish key reversal the prior week, no follow through to the downside last week, I think that we can consolidate further and then press higher on a weakening U.S. dollar. The GDX, the gold miners, I prefer the leveraged ETF NUGT, but GDX, we are in a very strong, let's update this chart. Okay, so here you have it. The GDX has broken out of a wedge formation. It is putting in a higher low on a weekly basis. This is not a daily chart, folks. This is a weekly chart. The downtrend which we had been in is now broken. We are putting in a higher low. We are breaking out of a wedge formation. And not only that, we have broken out, pulled back, and retested the breakout point. This is very bullish stuff. Members, will be talking more about our gold mining position and how we plan on trading it on the week ahead commentary. Again, folks, if you're not currently a member and you would like to become a member when we reopen up our membership enrollment, please enter your email address on the website and we will let you know when we open up enrollment. Let's leave off with two charts. The semiconductor sector, of which we are currently short, and the banks, which we have no position in. The semis, using the SMH, broke down several weeks ago after putting in a double top lower high. Now, as I mentioned to members, expect a rally back up to try to recapture this resistance level. I said that 3 weeks ago on the breakdown. What happened? Exactly that. Now, can the semiconductors rally up and through resistance here? Of course they can. In fact, since the semis have not yet broken down below 80.92 on the SMH, the probability of a continuation move higher is still in favor of bulls. But I don't think that's going to happen. And if we break down and close below 80.92 on a weekly basis, folks, it's all over. That's a weekly confirmation breakdown on the semis, and you're going to see weakness in the semis for quite some time. Now, let's leave off with the banks. The banks, yields are going lower. Anyone that believes that the Federal Reserve can roll off debt off their balance sheet and not have an adverse impact on this economy is out of their mind. The United States is broke. The reason why they can't raise rates is because we can't afford the additional interest that we need to pay on our debt. Now, given the fact that the Federal Reserve is loaded with academics and statisticians, might they try? Sure. But they also tried to raise rates and did raise rates in 1937, and it led to another leg down in the Great Depression. So this is not good. These charts are bad, and they are setting up for a continuation breakdown. Would I be a net shorter of this market just yet? No, I would not. But given current market conditions and the absolute corruption in the media and the lack of backbone on the part of Republicans, it is not setting up for a good 2018. And again, folks, I will begin to send out best stock charts again over the weekend. In a couple of weeks, I'm just so busy right now trying to get the website in order, working with developers and creating content that I just don't have time for it. So please, if you're interested in joining, enter your email address on the website. That'll express to me some interest on your part. And when we have open enrollment, we will certainly let you know about it. And with regard to the outcome of what I perceive to be really a soft coup right now on both the part of politicians and the media, we really need to look forward to the midterms, identify those Republicans that are not supporting the president. If he's wrong, he's wrong. But when he's being attacked by the media and they are manipulating the narrative and his own party backs away, those Republicans need to be primaried out. So let's look forward to the midterms. Sorry for all the political banter, but right now it's affecting the markets. Therefore, fair game. Everybody have a great weekend. If you have any questions, let me know. I'll talk to you soon. Be well.